All right, let's dive in. Today we're taking a deep dive into PayPal.
Yeah, buckle up. It's October 31st, 2024, and we're going through their latest earnings call.
So looking at where this payments giant is headed.
It's fascinating. Paypal's in this massive transformation right now, trying to shift from just like that payments button
Right.
to like a full-blown commerce platform. So they want to own the whole store, not just be the cashier.
Wow. Okay, so what are you doing to make that happen?
Well, they're making huge moves with partnerships. Big names like Fiserv, Adyen,
Wow.
even Amazon and Shopify.
Yeah.
It's not just about processing payments anymore, right?
Yeah.
It's about getting PayPal into every step of like the buying and selling experience.
Okay, so more than just that button at checkout.
hmm
But how's that actually playing out?
So one key area is their new branded checkout experience. Data showing like big jumps in conversion rates.
Yeah.
Some cases up to 400% for one-time checkout.
That's incredible.
Yeah, and a good boost in, buy now, pay later. Even 100% increase for those repeat customers using stored info. They call vaulted checkout.
Those numbers are insane.
Yeah.
But if it's so great, why does it only live on 5% of their U.S. traffic?
Right. That's one of the big questions. I mean, the holidays are here and they're really pushing for a wider rollout, but there's got to be hurdles, right? Likely integration with all these merchant platforms. So balancing speed and making it seamless.
Makes sense.
Yeah.
So not just shiny new features, but making sure they work for everyone. So what about the money side? How are they managing this growth?
Well, their price to value strategy with Braintree is interesting. They're not just chasing volume, they're going after those big merchants that want all those extra services,
Hmm.
like serious fraud protection, global payments, and even, custom checkout.
Yeah.
Yeah.
So I'm guessing that's impacted revenue growth.
Yeah, Braintree revenue growth has slowed. It's a calculated risk, though. This focus on higher value clients is boosting those transaction margin dollars. So it's the profit they make per transaction. It seems like a move towards sustainable profit, not just market share.
So they're playing the long game, quality over quantity. Is Wall Street buying it, though?
Well, there's definitely concern.
Yeah.
One big question is, can this focus on high-value clients really offset the slower growth in unbranded volume? Like those transactions where PayPal isn't front and center, usually smaller e-commerce platforms.
It does seem a bit risky, right? Like, what if this premium service just turns off those smaller merchants who can't afford the fancy stuff?
Exactly, and it leads to another issue. Can they keep this transaction margin growth going? Remember, most of this year, they've been winning big from high interest rates, earning a ton from customer money just sitting there.
Oh, right, yeah.
Yeah.
But rates are predicted to drop, so that's probably ending. What's the plan then?
They launched a new product, Fastlane, aimed at that unbranded market. It's a guest checkout, letting customers skip the whole account creation thing, aiming to make it so smooth that everyone just uses it, even those who don't like signing up.
Smart.
Over 1,000 merchants are already using it, 170 million customer profiles in the U.S. ready for seamless checkout.
Not bad at all.
Not bad, right? It shows a key part of their strategy, owning the whole customer journey.
Yeah.
If they can be the checkout solution, they've got way more chances to turn those one-time users into full PayPal users, bringing them into the ecosystem.
A gateway to the full PayPal experience.
Exactly.
So capturing the premium market and that volume-driven, unbranded space.
Cool.
But how does it all fit in the long term? What's success for PayPal, say, 2025?
Well, that's the big question. To answer it, we got to look deeper into what PayPal themselves are saying. Let's focus on what they told analysts, where they laid out their future vision, the challenges ahead, and where they're prioritizing growth. So analysts were really pushing them on this long-term plan,
Yeah.
And they kept saying durable growth levers, which sounds fancy, but what does it actually mean?
Yeah, it's a little bit of corporate jargon. Like, what are these durable growth levers in plain English?
Basically, things that can drive growth and profit over the long haul.
Okay.
So not just a quick win, but like building a business that can handle anything and keep delivering results.
Right. Got it. Solid foundations,
Yeah.
not just trends. So what are some examples? What are they focusing on?
3 key things: that branded checkout experience, then expanding their extra services, and really using the power of Venmo.
Okay, so like a diversified portfolio.
Yeah.
Not putting all their eggs in one basket.
Exactly.
So let's unpack those. Starting with branded checkout. We talked about the conversion rates, but what else makes this a long-term growth driver?
Well, they're pouring money into making it better. refining that checkout process,
Right.
making it as easy as possible, really intuitive, and they're focusing on making it personal too,
Yeah, yeah.
tailoring it to what each customer wants. The idea is to make PayPal the most user-friendly, the most trusted checkout out there. It's a hard advantage to beat if they can pull it off.
Yeah, makes sense. So it's not just about features, it's the whole experience, keeping people coming back.
Right.
What about those extra services? We talked about fraud protection and global payments, but is there more? Are they going beyond that?
Oh, absolutely. They're getting into things like marketing analytics, loyalty programs for customers, even helping merchants with working capital,
Yeah.
becoming that one-stop shop for businesses, giving them everything they need to thrive in the digital world.
So almost like their own little world where businesses just rely on PayPal for more and more.
Yeah, exactly.
That's smart, right? Build that loyalty and not rely so much on those unbranded transactions that might disappear. Okay, but what about Venmo? It started as just peer-to-peer payments, but there seems to be a bigger vision now.
Oh, yeah. Venmo is a really interesting story. They're taking this social payments app and turning it into a full-on financial platform.
Yeah.
Debit cards, instant transfers, even crypto trading.
Wow.
They want to capture that younger crowd, the tech-savvy folks, and be the center of their financial lives.
It's smart how they're keeping it separate, like a cool little brother to the more grown-up PayPal. But can they actually compete with the big guys in finance?
Right. That's the question. And the analysts were tough on them.
Yeah.
Big concerns about roadblocks, competition, the whole thing.
Yeah.
One big one was, what happens when interest rates fall?
Oh, right, right. They've been making a killing off that interest, but that's not going to last forever. How are they going to make up for that lost income?
They know it's an issue.
Yeah.
They kept saying they're focused on efficiency,
Okay.
streamlining everything, cutting costs, doing more with less, basically squeezing out more profit from each transaction, even if that interest income goes down.
So it's back to basics. Good business practices. Is that enough, though?
Well, that's where innovation comes in.
Right.
They're putting a lot into AI, machine learning, blockchain. They think that's how they stay ahead.
Yeah.
Automate things, reduce fraud, and come up with brand new stuff.
So it's like playing both sides. Tightening the belt, but also investing in the future. But with so many things going on, how do they actually measure success? Like, what metrics are they watching?
They pointed to a few key things. So active accounts, how much money is flowing through, and those transaction margin dollars. Those are big. And also how engaged users are, especially in Venmo.
Right? Makes sense.
Seeing if they're really expanding its reach, making it more useful.
So like a multi-dimensional chess game,
Very much.
trying to optimize all these different things at the same time. But, I mean, there's so much competition in payments.
Yeah.
How confident are they that they can pull this off?
Well, that's where we need to look at their leadership, their messaging. Did they sound confident or nervous? Did they give real examples of what's working and what's not? Let's dig into that and get a clearer picture of their outlook.
Yeah, going through the Q&A, their leadership, they sounded pretty confident. Cautious, but confident. They know there's challenges.
Competition's getting tougher, regulations are changing, and those interest rates, who knows?
Right.
But they kept stressing, like they believe in their platform, in the choices they've made.
Interesting. Like, we see the risks, but we got this.
Yeah.
But do they have anything to back that up?
Oh, yeah. They pointed to some big wins, like how fast people are adopting the new checkout and how Venmo is growing like crazy. More users, more transactions, the whole thing. They also talked about all these new partnerships with major companies, shows that businesses really want what they're offering.
So not just words, they're showing results. But what about the big problems? Like, did they say how they'll handle those falling interest rates? Or the competition breathing down their neck?
They talked about a multi-pronged approach. I love that term.
It is a good one.
First, squeezing more profit out of each transaction.
Oh, yeah.
Streamlining stuff, using tech to be more efficient.
Okay.
Second, going all in on innovation, AI, machine learning, finding new ways to make money and improve what they already do. And lastly, really focusing on building that global network, connecting everyone, merchants, customers, developers. No one else can do that like they can, they say.
So they're not just predicting what they have, they're shaping the future.
Exactly.
But with so many big goals, how do they even know if they're winning?
Oh, well, they talked about key performance indicators, those KPIs everyone loves.
Right.
Active accounts are huge, how much money is moving through the system, those transaction margin dollars. And of course, keeping an eye on how engaged people are.
Yeah.
Especially in Venmo, seeing if all their work there is paying off.
So a lot to keep track of. Growth, profit, innovation. It's a lot.
It is. It's a tough balancing act.
So for our listeners, what does all this mean for them? How does this affect them, whether they're buying stuff or running a business?
Well, as PayPal becomes more than just payments, like a bigger part of how we buy and sell things, you're going to see changes. How you shop, how you pay, how you manage your money could be good for consumers if it's truly seamless and personalized, but you got to keep an eye on their data practices, right?
Right.
Make sure they're respecting your privacy.
Definitely.
And for businesses, all these extra services PayPal's offering, they could be really valuable for growth. But do your homework.
Yeah.
See if the costs make sense, if their platform really fits your needs.
This deep dive into PayPal, it shows a company changing, evolving, trying to navigate this fast-paced world. And they're ambitious, betting big on innovation, partnerships, and doing more with less.
Yeah, it's a fascinating story. Will it work? Who knows? But one thing's for sure, PayPal's definitely a company to watch. They're changing how we think about digital payments and maybe even more than that.
And that wraps up our deep dive into PayPal.
Yep.
We went through their earnings call, looked at their strategy, the challenges, the opportunities, what it all means for us, the consumers, and the businesses. As always, keep exploring, stay curious about this world of finance and tech. It's always changing. Thanks for joining us.